You just got home from work and decide to go get the mail before you go inside. You open the mailbox and see a letter from the Internal Revenue Service. You already know that this can't be good. If you owe back taxes, chances are that your letter is a collections notice. But why did you receive it? And what should you do now? Understanding IRS letters and what they really mean. That's the topic of today's video on the other side of the break.
1877 Levy King, Levy Levy King, 1877 Levy King, LevyKing.com.
What's up, guys? Corey Hankerson here from Legacy Tax, and they call me the Levy King because I've helped thousands of clients with unfiled returns, back taxes, tax liens, and that's right, IRS levies. If the IRS took your check, the Levy King will get it back. 1877 Levy King, LevyKing.com. I'm also the author of End the Tax Nightmare, Insider Secrets to Beat the IRS and Reduce Your Tax Debt. Inside the book, I show you how to stop IRS liens, levies, and garnishments without paying the tax in full. How to set up the payment plan you want, not the one they want you to have, and how to potentially settle your tax debt for less than you actually owe. My book has been a top seller on Amazon for years. You can buy it right now for $19.99, but I want to give you a copy of the book absolutely free. Just go over to my website, www.endthetaxnightmare.com, enter your name, your email address, and I'll send you a copy right away. No charge, not even for shipping, totally free. Look, before we go any further with the video, please take a moment to subscribe to my channel and don't forget to smash that like button for the YouTube algorithm and hit that notification bell so you'll get a heads up every time we drop a new video. All right, guys, let's dive into today's content. All right, the first notice we're going to talk about is the CP14, or sometimes you may receive an LT17. They're basically the same thing. They're a notice of balance due. A CP14 is one of the first communications you'll receive from the IRS when you owe back taxes. An LT17 is similar in that it is also one of the earlier notices they sent out regarding tax debt. The notice is generally non-threatening. It doesn't mention liens or levies or even really hint at any consequences of not paying the tax debt. The CP14 and the LT17 really just tell you about the balance and explain your different payment options. They're both pretty cut and dry. But here's something else you need to know about the CP14 notice. The IRS has acknowledged that it sent out millions of these notices telling people that they owe back taxes for tax debt that has already been paid. They acknowledged that the mistake and they acknowledged the mistake and posted it on their website. They say that the problem was caused by an IRS delay in processing payments. In other words, you filed a tax return with the balance due. You submitted payment when you filed the return. The IRS processed the return, but they didn't process the payment. So in their system, it looks like you didn't pay, even though you actually did. So what do you do if you received one of these erroneous letters? The IRS says, do nothing. They say you're not required to respond, and you should wait between 6 and 8 weeks for the payment to catch up with the return and post in their system. Now, what do I say? I say you need to reach out to the IRS and provide proof of payment to avoid them tacking on additional penalties and interest. Next up is the LT 3172, Notice of Lien Filing. The 3172 is notifying you that the IRS has filed a notice of federal tax lien down at the local courthouse in the county where you live. A federal tax lien is the government's legal claim against your property when you owe back taxes. The lien protects the government's interest against all of your property. Most people immediately think of a lien being filed against their home, but when the IRS files a tax lien, the lien encumbers everything you own, including your bank account, retirement accounts, investments, vehicles, business assets that are held in your name, and of course, your real estate. The tax lien also encumbers property that you may acquire in the future. That's right. People are often unaware that a tax lien applies to property that you acquire after the lien was put in place. So if the IRS files a tax lien against you today and you buy a new house 5 years from now, the lien will attach to that new property as well. So how do you get rid of a lien? The two most common ways to get rid of a tax lien are, number one, pay the tax. You can pay it in full, you can set up an installment agreement, or negotiate an offer and compromise. Once the tax is paid, the lien releases. Now, if you can't pay it, number two, you can wait out the clock. The IRS only has 10 years to collect back taxes. And after 10 years, the tax becomes uncollectible. At that time, the lien will be released. Now, there are other strategies besides paying the tax and waiting out the clock. They include lien withdrawal, lien subordination, and lien discharge. But those are topics for a whole other video. Check out this video for more details where I already covered some of those. Okay, guys, next up is the CP 504. The CP 504 indicates that you have reached the point where things are about to get serious. The CP 504 puts you on notice that the IRS intends to levy your wages and bank accounts if you don't pay the tax. Section 6331D of the Internal Revenue Code requires the IRS to provide you with sufficient notice if the government intends to levy, meaning garnish, your wages or seize other property like your bank accounts. This notice is also telling you that the IRS will begin searching for other property that they can levy, such as your state tax refund. Now is a good time to take action. The CP 504 used to explicitly state that the IRS was going to levy your state or federal tax refund to satisfy your unpaid balance. This wasn't really much of a threat because most people who owe tax debt to the IRS don't actually get refunds anyway. The IRS essentially they recently changed the CP 504 to make it look more like a regular levy notice and not just a notice regarding your state tax refund. The new CP 504 doesn't mention a levy against your state tax refund. It simply states that they will levy or seize property. The new form goes a step further as it explicitly states that if you don't pay the tax, the IRS is going to consider your non-payment as a quote-unquote active choice. This language seems to indicate to me that they're going to take this a lot more seriously than maybe they did in the past. If you want to know whether you have an old CP 504 or the new CP 504, look for the barcode at the top and the QR code at the bottom of your letter. If you've got the barcode and the QR code, you've got the new CP 504. And I would really take this a lot more seriously than a notice that only states an intent to take your state tax refund. If you've got a CP 504 and you can afford to pay the tax in full, you should probably do so at this time. But if you can't afford to pay the tax in full, but you owe less than $10,000, you should contact the IRS using the contact information on the notice and set up a payment plan to pay the debt over time. Now, if you owe more than $10,000, you'd probably be wise to contact a tax professional. Like my team here at Legacy Tax, we can protect you from liens and levies while we figure out a way to handle the debt itself. All right, so next up is the LT 725B, which is a Notice of Revenue Officer Appointment. This one is a game changer, okay? So when you have outstanding balances and they exceed a certain dollar threshold, the IRS may assign a revenue officer to collect the tax. A revenue officer is assigned after you've ignored the previous letters or you didn't respond to the previous letters and phone calls. The revenue officer is specially trained to collect taxes owed, and they have greater collection authority than some of the other IRS employees that you may have dealt with in the past. They're allowed to do things that other employees are not. Revenue officers will be the sole point of contact for your tax case, whereas before, you probably called the IRS and spoke with a different representative each time. Once a RO is assigned, only that RO has the authority to resolve your case. ROs also work in the field as opposed to other IRS personnel that work at various IRS campuses. Before the IRS was appointed, you were likely receiving letters and calls from IRS offices that could be like clear across the country. The revenue officers work and live in your local community. This makes it easier for that person to come to your job, come to your home, or speak with other people in the community about you. The RO is going to give you a list of things that you are required to provide. Things like tax returns, bank statements, pay stubs, documentation of all your assets and liabilities. You'll need to provide them by a certain due date. And if you don't, they'll start to levy your wages or your bank accounts and seize your assets. Okay, so next up is the LD 3164, which is the Notice of Intent to Contact Third Parties. Most people don't know that the IRS has the authority to contact third parties and ask about you and your whereabouts or your assets in an attempt to collect the tax debt. They can contact your neighbors, business associates, family, employers, banks, other types of financial institutions like banks, all to determine how they can collect the tax that you owe. They can knock on your neighbor's door. They can show up unannounced at your job and begin asking questions about you and your finances. By the time you've gotten to this point, they've sent several notices reminding you of the balance, and they've probably appointed a revenue officer to handle your case, and you still haven't responded. So now they're kind of hoping to kind of embarrass you a little bit and get you to respond that way. If you still don't respond, you might end up having an IRS revenue officer, knock on your neighbor's door and ask all sorts of questions about you. Or they might show up at your job and start asking your boss questions about how much you make and how frequently you get paid. The way to avoid all this is by contacting the revenue officer or hiring a professional, which is probably the better thing to do, and have them contact the RO and make arrangements to resolve the tax debt, either by paying it in full or by setting up an installment agreement, currently non-collectible, or an offer in compromise. If you don't, you might end up with an LT11, which is our next notice. Okay, so an LT11 or an LT 1058, both of those are final notices of intent to levy and notice of your right to a hearing. When you get an LT11 or an LT 1058, just know that the IRS just took the gloves off. I mean, you're out of time here, right? So now it's a street fight. Once the IRS mails that final notice of intent to levy, they can legally start taking your paycheck, taking money in your bank accounts, or seizing other property that you may own. All of this can happen in as little as 30 days and without any further warnings. If you get this letter and you do nothing, your paycheck could disappear overnight. But here's the good news. You have the right to request a special IRS hearing, which can stop the levy and give you time to fix this. But you've got to take action quickly if you want to stop this bad situation from getting worse. The first question that people have when it comes to a levy is, how much can the IRS take? The simple answer depends on whether it's a wage levy or a bank levy. See, with a bank levy, the IRS can take everything in your account on that particular day up to the amount that you owe. So, for example, if you owe $10,000 and you have $1,000 in the bank, the IRS can levy the entire $1,000. But if you have $12,000 in the bank, they can only take 10 grand, and the other 2 grand will remain in your account. Now, wage levies work differently for 2 reasons. Number one, a wage levy is a continuous levy, meaning that each and every paycheck is going to be subject to the levy until the IRS releases it. Number two, the amount that they can take is going to vary depending on how often you're paid, your filing status, and the number of dependents you claim. So, for example, if you're a single filer with no dependents, you're allowed to keep $249 per week, and everything else goes to the government. So if you normally take home $1,000 a week, you would now only get $249 a week, and the IRS would get the other $751 to apply to your tax debt. I don't know about you, but most people would have a hard time living on $249 when they're used to receiving $1,000. Look, speaking of tax debt, I want you to know that there are special programs in place to help you get a fresh start. But how do you know if you qualify? No 2 cases are exactly alike. So how do you know exactly how much you can settle for? Well, I've created a free tool to help you get qualified for a fresh start. Just head over to www.levyking.com or click the link below. Answer the prompts and answer a few simple questions, and we'll help you figure out your eligibility. That website again is www.levyking.com, or you can give us a call at 1-877-LEVY-KING. That's it for this week, guys. Talk to you later. Bye.
1-877-Levy King. Levy Levy King. 1-877-Levy King. LevyKing.com.
Back taxes to the IRS? Call the Levy King. He's the best. 877-Levy King. LevyKing.com.
1-877-LEVY-KING, LevyKing.com.